We've all had that dream, right? Finding that one secret, that one perfect, foolproof strategy to just beat the market and make a fortune. It's kind of like the modern day search for the Holy Grail. But what happens when that dream smacks right into a really harsh reality? Well, let's follow one trader's quest and find out.
Okay, picture this. You're scrolling online, maybe late at night, and then you see it. A video promising this magic formula, a strategy that apparently never fails. Come on, we've all been there, tempted by that promise of easy money. But what happens when you really, truly believe you've found it?
So, let me introduce you to Rahul. He has gone deep down the rabbit hole, and he is absolutely convinced he's struck gold. After seeing just 5 winning examples, he's ready to risk it all on this sure thing. He's about to learn a very, very expensive lesson, but luckily for him, it's not going to be with his own money. But our seasoned guru, he's not so impressed. He knows that the biggest risk in trading isn't actually in the market itself. Nope, it's inside our own minds. And this is exactly where that emotional excitement of a perfect setup is about to collide with some cold, hard, skeptical analysis. See, Rahul is falling for a classic mental trap. Confirmation bias. It's this sneaky little tendency we all have to just favor information that confirms what we already want to believe. His brain wants the strategy to work, so it eagerly latches onto those 5 winning trades, while totally conveniently ignoring the most important question of all. What about all the times it failed? And this is where it gets really clear, right? You see the 5 perfect examples, those jackpot trades, but what you're ignoring is the possibility of, say, 50 failures, the trades that could literally wipe you out. You're seeing the proof you want, not the reality you actually need to see. So, what's the antidote? This brings us to the guru's core philosophy. Forget the YouTubers, forget the so-called market gurus, and forget your own gut feelings. In the world of serious trading, there is only one ultimate decider of truth. And that, my friends, is data. All right, this is where theory meets reality. We're about to put Rahul's exciting new hypothesis to the ultimate test. It is time to take his super sniper strategy and just see how it holds up against the brutal, unforgiving history of the market. Now, we're not just going to guess here. This is a scientific experiment. The hypothesis is pretty simple. Buy when the RSI indicator drops below 30, which supposedly signals that something is oversold. The dataset we'll use is the Nifty 50 index, and for the time period, we're going straight into the fire, the massive market crash of 2008. And here we go, it's January 2008, the market is in free fall, and boom, the RSI indicator drops below 30. According to the super sniper rules, this is it. The rubber band is stretched. It has to snap back. This is the moment to buy.
Ouch. Okay, 1 week later, the position is already down 10%. The market didn't snap back, it just kept falling. Maybe just a bit of bad luck, right? Rahul might even argue, hey, let's average down. Buy more now that it's even cheaper.
And just another week forward, the market has tanked even further. The total loss is now a catastrophic 25%. You see, what Rahul didn't realize is that in a really strong downtrend, something can stay oversold for weeks, even months, just wiping out anyone who keeps trying to catch that falling knife. The data has spoken. The hypothesis has been tested, and it has been utterly, completely rejected. And this is the crucial lesson. A strategy that looks absolutely perfect in a few hand-picked examples can completely fall apart the second the market conditions change. So this brings us to a really fundamental shift in thinking. The goal isn't to find a strategy that never loses. Spoiler alert, that doesn't exist. The real goal is to understand the true cost of just participating in the market, what we could call the price of admission for any potential reward. So let me ask you a question. Most people, they only focus on how much a strategy can make. But what if I told you the most important number is something else entirely? What's the one metric that actually measures the psychological pain you have to be willing to endure? It's called drawdown. Drawdown is simply the drop in your account from its highest point down to its lowest point during a losing streak. But it's not just a number on a screen, it's a measure of pain. A professional trader doesn't ask, how much can I make? They ask, what is the maximum drawdown I can expect? Let's make this really simple. Imagine you start with $100,000. Things are going great, and your account hits a new peak of $150,000. But then a string of losses takes you down to $120,000. That $30,000 drop from the peak, that's your drawdown. The real question is, can your emotions handle that kind of hit without panicking? And this slide just brilliantly illustrates the disconnect. New traders, they expect this smooth escalator ride straight up. They want consistent, easy gains. But the reality of any winning strategy is a roller coaster. There will be thrilling highs for sure, but there will also be these gut-wrenching dips. The question is, can you stay on the ride? This whole journey, from the excitement of a holy grail to the pain of a brutal backtest, it's all about one fundamental transformation. It's about shifting your entire identity. So what does this new mindset look like? Well, first, you stop hunting for tips online. Instead, you form a hypothesis, an idea. Then you test that idea rigorously against years of historical data. You analyze the risk by looking at the worst-case drawdown. And finally, you let the data make the decision for you. It's a yes or a no. Simple as that. And this is the moment of graduation. A gambler bets on hope and a few shiny examples. A researcher operates on evidence. It's a really profound shift from chasing luck to building a solid process. Look, the past holds all the secrets you need to build a robust strategy for the future. But the real secret is having the discipline to look at all of it, the good, the bad, and yes, the ugly. So the only question left for you is, will you?